Hello students and welcome to the lecture. So students, as you can see here that basically in this lecture we are going to talk about the types of banking and types of banks part 2. Okay, this is going to be a lecture. Types of banking and types of banks. Right? In the previous lecture we had started our discussion over this topic and we had you can say come across about some types of banking and the types of banking. In this lecture, we will continue this discussion, and these are the things that we are going to discuss, like Mudra Bank, genesis of Mudra, Mudra Vision, Mudra Mission, Mudra Purpose, the Mudra, roles and responsibilities of Mudra, the purpose of Mudra loan, refinance schemes for banks, the Mudra card, small finance banks, objectives behind the small finance banks formation, eligible promoters of SFB, small finance banks, scope of small finance banks, capital requirement and promoters' contribution, prudential norms to be followed by the small finance banks, in principle, approval to set up the small finance banks, head office of small finance banks, payment banks in India, objectives behind the payment banks formation, eligible promoters for payment banks, scope of payment banks, deployment of funds under the payment banks, capital requirement and promoters' contribution, in principle approval to set up the payment banks, head office of payment banks, and at last we will discuss the summary of all the things that we will discuss in this lecture. So you can say this is going to be an important discussion, alright? But before starting this, as always, we have our small disclaimer presented over. So the disclaimer is like, the images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this deck and have any concerns or issues, then please contact us at sathee@iitk.ac.in and we shall remove the image. So first we are going to talk about the Mudra Bank. What do we mean by the Mudra Bank? It is actually the Pradhan Mantri's Mudra Yojana, known as PMMY. The PMMY is a scheme launched by PM Modi on 8 April 2015 for providing loans up to rupees 10 lakhs to the non-corporate, non-farm small micro enterprises. These loans classified as Mudra loans under the PMMY. These loans to be given by the commercial banks, regional rural banks, small finance banks, cooperative banks, microfinance institutions, and non-banking financial companies. The borrower could approach any of the lending institutions mentioned above or could apply online through this portal. The genesis of Mudra. In the Union Budget for financial year of 2015 to 16, the formation of Mudra Bank was announced. Mudra was registered as a company in March 2015 under the Companies Act 2013 and as a non-banking financial institution with Reserve Bank of India. It was launched by PM Modi on 8 April 2015. So now what is the Mudra's vision? To be an integrated financial and support services provider par excellence benchmark with global best practices and standards for the bottom of pyramid universe for their comprehensive economic and social development. Alright? Then, what is the Mudra's mission? To create an inclusive, sustainable, and value-based entrepreneurial culture in collaboration with our partners institution in achieving the economic success and financial security. What is Mudra's purpose? Our basic purpose is to attain development in an inclusive and sustainable manner by supporting and promoting the partner institutions and creating an ecosystem of growth for micro enterprises sector. The Mudra. The Micro Units Development and Refinance Agency Limited, set up by the Government of India. Initially formed as a wholly owned subsidiary of Small Industries Development Bank of India, with 100% capital being contributed by. Presently, the authorized capital is 1000 crores and paid up capital is 750 crores, fully subscribed by the city. It will be responsible for developing and refinancing all micro enterprises sector. It will partner with banks, microfinance institutions, and other lending institutions at state level, regional level to provide the microfinance support to the micro enterprise sector in the country. The Mudra. No. The microfinance is an economic development tool whose objective is to provide income generating opportunities to the people at the bottom of the pyramid. Includes the provision of credit, other credit plus services, financial literacy, and other support services. Roles and responsibilities of Mudra. So Mudra has been formed with the primary objective of developing the micro enterprise sector in the country by extending various supports, including the financial support in the form of refund. Like you can say what you mean by the reference. Like suppose if the bank is having deposit of 10 crore, the bank granted rupees 8 crores from it to the people as a loan. So now the bank will only have 2 crores left with it. Now more and more people coming to the bank. So how the bank will be able to meet up the demand of the people? So that's how the refinance institution works. Like they will provide additional 8 crores to the bank, so does the bank could meet up their demand. It will provide refinance support, monitor the PMMY data by managing the web portal, facilitate offering guarantees for loans granted under the PMMY, take up other activities assigned to it from time to time. Mudra has put in place a monitoring portal, captures the data on lending under PMMY in a granular fashion. What is the purpose of Mudra loan? Mudra loan is extended for a variety of purposes, provides the income generation and employment creation in manufacturing, services, retail, agricultural allied activity. Under the aegis of Pradhan Mantri Mudra Yojana, Mudra has created the product schemes. The interventions have been named Shishu, Kishore, and Tar to signify the stage of growth, development, and funding needs of the beneficiary micro unit and enterprise. Shishu, if we talk about, cover loans up to rupees 50,000. Kishore, covering loans above rupees 50,000 till rupees 5 lakh. Tarun, covering loans above 5 lakhs and up to rupees 50 lakhs. Okay. So these are the three schemes that runs by the Mudra loan. Purpose of Mudra loan. The funding support from Mudra are of four types. First, microcredit schemes (MCF) for loan up to 1 lakh finance through the MFIs microfinance institutions. Refinance schemes for commercial bank and regional banks and scheduled cooperative banks. so that they could fulfill their needs of granting the loans to the more and more people. Women Enterprise Program, securitization of loan portfolio. Then the refinance schemes for the banks, if we talk about different banks like the commercial banks, regional banks, and scheduled cooperative banks, eligible to avail of free finance support from MUDRA for financing the micro enterprise activity. The refinance is available for term loan and working capital loans up to an amount of rupees 10 lakhs per unit. Okay. MUDRA card. The MUDRA card is an innovative product, provides working capital facility as a cash credit arrangement. MUDRA card is a debit card issued against the MUDRA loan account for working capital portion of the loan. National Payment Corporation of India, the NPC. It has then given RuPay branding to the MUDRA card, also separate BIN and IIN for the same, by which credit history could be tracked. MUDRA loan, therefore loans up to rupees 10 lakh have been made collateral free as per the RBI norms for the micro unit. Like you can say, if there is any micro unit seeking the loan up to rupees 10 lakh, this micro unit is not required to place some collateral security with the MUDRA bank. Okay, it means the loan could be granted without any collateral security. Then we have the MUDRA card. It is to mitigate the issue of collaterals. MUDRA is offering the credit guarantee product. MUDRA credit guarantee is extended by the creation of fund called the Credit Guarantee Fund for Micro Units, CGFME. Accordingly, all eligible micro loans sanctioned since April 8, 2015 covered under the scheme. The scheme is being managed by the National Credit Guarantee Trust Company Limited (NGCTC), which is an agency promoted by the Government of India or GOI. Small finance banks. Reserve Bank of India released the guidelines for licensing of small finance banks in the private sector. Like if we discuss the key features of the small finance banks, then these are: first, to further financial inclusion by provisions of saving vehicles. Second, supply of credit to the small business units, the small and marginal farmers, micro and small industries, and other unorganized sector entities through the high-level technology low-cost operation. Okay, like this is the one of the main motive of small finance banks formation. Like what are the and who are the eligible promoters for small financial banks? So we could say residents, individuals, professionals who having 10 years of experience in banking and finance, and companies and societies owned and controlled by the residents, they will be eligible to set up the small finance bank, SFB in short. Second, existing non-banking finance company NBFCs, microfinance institutions MFIs, and local area banks LAB that are owned and controlled by the residents could also opt for conversion into the small finance bank. Then promoter groups. It should be fit and proper with a sound track record of professional experience or of running their businesses for at least a period of 5 years in order to be eligible to promote the small finance bank or SFB. Okay. The scope of SFB, if we talk about, it shall primarily undertake basic banking activities of acceptance of deposits, lending to unserved and underserved. Okay, there are two things: unserved and underserved section. So, what does it mean actually? Unserved sections are those sections which are generally not entertained by the banks in order to granting the credit facility. Okay, So these sections are generally remains out of the scope of getting finance from the bank. This is unserved. Underserved means like the sections which having the demand of certain amount, but only getting a help from the banks up to certain amount which is less than the required amount. For example, if there is any sector which is currently required 100 crores credit, but only being provided 50 crores, then the 50 crores is the underserved requirement. And this includes the small business units, small and marginal farmers, micro and small industries, and unorganized sector entities. These are some of the part of unserved sectors, generally not getting entertained by the banks. Some are the part of underserved sections. It means getting the amount less than the required amount. There will not be any restrictions in the area of operations of small finance bank. The capital requirement and promoters' contribution. The minimum paid up equity capital for the small finance bank shall be near about 100 crore. Then only the bank could be established as the SFB or the small finance bank. The promoter's minimum initial contribution to the paid up equity capital of such small finance bank shall at least be 40% and gradually brought down to 26% within 12 years from the date of commencement of the business of the bank. Like you can say, suppose if the bank was started its business in year of 2010, okay? So on that year, the promoter must have initial contribution to the paid up capital up to 40%. But the promoter is not required to hold this equity in the share, which means gradually the promoter have to down the contribution from 40 to 26% within the 12 years. It means by the year of 2022, if the business was started in 2010, the equity shareholding must be 26% for the promoter. Okay. There is an important note here. Foreign shareholding in the small finance bank would be as per the FDI, foreign direct investment policy, for private sector banks, which is amended from time to time. Okay, it means it is not fixed and got amended from time to time. Thereafter, whatsoever are the prudential norms to be followed by the SFB or the small finance bank. So the SFB will be subject to all prudential norms and regulations of the RBI, okay, as applicable to the existing commercial banks. Like you can say, whatsoever the you can say regulations and prudential norms, the Reserve Bank of India applies to the scheduled commercial banks under the Schedule 2 of the RBI Act 1934. The same are also applicable to the small financial banks. Okay, like the small financial banks also required to maintain the cash reserve ratio, CRR, and statutory liquidity ratio, SLR. Okay, the CRR and statutory liquidity ratio, SLR. The SFB will be required to extend the 75% of its adjusted net bank credit, ANBC, to the sectors eligible for classification as per the PSL, Priority Sector Lending, by the Reserve Bank. At least 50% of its loan portfolio should constitute the loans and advances of up to rupees 25 lakh. Okay. Thereafter, in principle approval to set up the small finance bank. Like how does the small finance bank could be set up? So the Reserve Bank of India decided to grant in principle approval to the following 10 applications to some small finance bank. First, AU Financer Limited, Jaipur. Capital Local Area Bank Limited, Jalandhar. Disha Microfinance Private Limited, Ahmedabad. Equitas Holdings Private Limited, Chennai. ESAF Microfinance Investment Private Limited, Chennai. Janalakshmi Financial Services Private Limited, Bangalore. RGVN Northeast Microfinance Limited, Guwahati. Curated Microfinance Private Limited, Navi Mumbai. Ujjivan Financial Services Private Limited, Bangalore. Utkarsh Microfinance Limited, Varanasi or Banaras, whatever you can call it. Okay. Like if we talk about the head offices of these small financial banks, so AU Financiers India Limited, Jaipur. Capital Local Area Bank Limited, Jalandhar. Disha Microfinance Private Limited, Ahmedabad. Equitas Holding Private Limited, Chennai. ISAF Microfinance Investment Private Limited, Registered Office, Chennai. Corporate Office, Thrissur, Kerala. Dhanalakshmi Financial Services Private Limited, Bangalore. RGVN Northeast Microfinance Limited, Guwahati. Suryoday Microfinance Private Limited, Navi Mumbai. Ujjivan Financial Services Private Limited, Bangalore. Utkarsh Microfinance Private Limited, Varanasi. After this, now we have the payment banks in India. So the Reserve Bank of India released the guidelines in order to provide the licensing for the payment bank. If we discuss about the features of payment banks, then we can say what are the objectives and the features behind the formation of payment bank. To further financial inclusion by provision of saving vehicles, like we could use the banking services so that we could, you can say, uses our savings to put in this bank, and then the savings will be used for making the payment. Then supply of credit to the small business units, small and marginal farmers, micro and small industries, and other unorganized sector entities through high level technology and low cost operation. Like whosoever are the eligible promoters for payment banks. Existing non-bank prepaid payments instrument, PPI issuers. Other entities such as individuals and professionals. Non-banking finance companies, corporate business correspondents, mobile telephone companies, supermarket chains, companies, real sector cooperatives. These all are owned and controlled by residents, and public sector entities may apply to set up the payment. Note: a promoter and promoter group could have a joint venture with an existing scheduled commercial bank to set up a payment. The promoter and promoter group should be fit and proper with a sound track record of professional experience or of running their businesses for at least a period of 5 years in order to be eligible to become a promoter of payment bank. Like what is the scope of payment bank? If we talk about first, acceptance of demand deposit. Payment banks will be initially be restricted to holding a maximum balance of rupees 1 lakh per individual customer. It means the payment banks are not allowed to hold the deposit amount more than rupees 1 lakh per individual customer. It is the maximum amount the payment banks could hold with them. Second, the payment banks are allowed to issue the ATM and debit cards, but they could not issue the credit card like the normal bank. Third, payments and remittances services could be provided through the various channels. Fourth, BC of another bank subject to the Reserve Bank guidelines on the BC. Fifth, distribution of non-risk sharing simple financial products like mutual fund units, insurance products, etc. Deployment of funds under the payment bank. The payment banks could not undertake the lending activity apart from amounts maintained as CRR, cash ratio, with the Reserve Bank on its outside demand and time liability. It will be required to invest minimum 75% of its demand deposit balances in the SLR or statutory liquidity ratio so that the eligible government securities treasury bills with maturity up to the 1 year only. To hold the maximum 25% in current and time fixed deposit with other scheduled commercial banks for operational purposes and liquidity management. Capital requirement and promoters contribution. The minimum paid up equity capital for payment banks shall be rupees 100 crores, that is the amount required to open the payment bank. The payments bank should have a leverage ratio of not less than 3%. Therefore, its outside liabilities should not exceed 33.33 times of its net worth, paid up capital and reserve. The promoter's minimum initial contribution to the paid up equity capital of such payment banks shall be at least 40% for the first 5 years from the commencement of its business. Note, the foreign shareholding in payment banks would be as per the FDI or foreign direct investment. It is a policy for private sector banks as amended from time to time. Note, operations of the bank should be fully networked and technology driven from the beginning, conforming to the generally accepted standards and norms. The bank should have a high-powered customer grievances cell to handle the customer complaints because the customer is the one who is actually investing in the bank. The Reserve Bank of India decided to grant in principle approval to the following 11 applicants to set up the payment bank. Aditya Birla, Nuvo Limited, Airtel M Commerce Service Limited, Cholamandalam Distribution Services Limited, Department of Post, FinoPay Tech Limited, National Securities Depository Limited, Reliance Industries Limited, Shri Dilip Shantilal Sangvi Limited, Shri Vijay Shekhar Sharma, Tech Mahindra Limited, Vodafone and Paisa Limited. Aditya Birla Numo Limited, Verwal, Gujarat. Airtel M Commerce Services Limited, Registered Office, New Delhi, Corporate Office, Gurgaon, Haryana. Cholamandalam Distribution Service Limited, Chennai. Department of Post, New Delhi. FinoPay Tech Limited, Navi Mumbai. National Securities Depository Limited, Mumbai. Reliance Industries, Mumbai. Vodafone and Paisa Limited, Mumbai. So here we have finished the topic. Now it's part for the summary discussion. So we have discussed about the Pradhan Mantri Mudra Yojana overview, launched at purpose, eligible lenders, objectives, Mudra structures like micro supplement and refinance agency limited Mudra and capital. Loan categories we have discussed of Mudra like Shishu, Kishore and Tarun. Additional funding support like MCS scheme, refinance a commercial bank, women enterprise program, synchronization of loan portfolios. Mudra card we have seen, credit guarantee fund we have seen like credit guarantee funds for micro units, CGFMU. Small financial banks we have discussed like objectives, eligibility structure we have discussed, operations we have discussed, payment banks objective structure and eligibility we have discussed, operations we have discussed, key features we have discussed, notable applicants for license we have discussed like small finance banks and payment banks. So with this we have finished this topic. It is requested and advisable to all of you. Kindly revise the facts and figures that all we have discussed in this lecture and keep yourself ready for the next. With this note, let's end this lecture and